morning. You're watching Businessworld Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our banner story. Capital Economics is painting a bleak picture for the Philippines, saying economic recovery prospects are dimming as chances of hitting herd immunity by year end are getting slimmer. Now, the London-based think tank says herd immunity, or the vaccination of at least 70% of the population, is critical in a strong rebound for the domestic economy. Capital Economics says prospects of a rebound are fast diminishing, and slow vaccine rollouts mean that there are risks that restrictions will need to be reimposed in the future. Vaccination is unlikely to change the outlook in the short term, the think tank notes. Experts have earlier said that with the Delta variant, 80 to 85% of the population must be vaccinated to attain herd immunity. Latest government data shows that more than 13.7 million Filipinos have been vaccinated so far. That's equivalent to about 12.8% of the population. The national government had earlier said that for 2021, they would aim for population protection, or the inoculation of 50 to 60% of the population. This is lower than the previous goal of attaining herd immunity by the year end. Now, the government is looking to open COVID-19 vaccinations for the general population by next month. Officials are banking on the jabs that are arriving in the coming weeks to extend the government's vaccination program. And among those expected to be included in next month's inoculations are vulnerable children with comorbidities. Vaccine czar Carlito Galvez Jr. says we will be receiving about 54.5 million doses of COVID vaccines over the next 2 months. He adds that these will be equitably distributed among the regions, especially those with the rising number of COVID-19 cases. Okay, quick peek at how our markets are opening this Thursday morning. We're 2 minutes into trade, and interestingly enough, we have rebounded a touch. We are up by 0.8%, back above those 6,800 levels, which we did break below yesterday. Let's take a quick peek at the sectors here. All sectors holding strong here. Properties leading the charges up by 1.2%, followed by holding firms, and basically everyone facing a broad-based happy rebound, so to speak. Financials, the least in terms of performance in the first 3 minutes of trade, but nevertheless, a lot to be watching out for when it comes to the financial sector. Let's take a look at those banks and how they're opening this morning. This amid a new report from the Bangko Sentral that bank lending had slipped for an 8th straight month in July. The good news, however, is that it did slip, but at a softer pace. So the outstanding loans by the biggest banks dipped 0.7% year on year. That's to the tune of 9.14 trillion pesos in the month of July. Now, if you compare that to the contraction that we saw in June, June saw a 2% contraction, and we are now more or less with the drop of December 2020. Now, just to recall, December 2020 saw bank lending fall for the first time since 2006. This, according to Nikki Mapa of ING, this softer decline in the bank lending reflects the lag in the effect of monetary policy. Plus, another point on the banks, this according to Moody's, Southeast Asian banks' capital can bear the pandemic losses according to them. And they said that banks in Thailand, Philippines, and Indonesia have sufficient capital and provisions to absorb the losses in this pandemic. And finally, let's take a quick peek at the movers here. Let me just refresh that, but you can actually see on my terminal here that yesterday's movers are not necessarily the same as we've seen this morning. You can see JG Summit leading the charge here, up by more than 2%, followed by Ayala Land, Mega World, and Globe Telecom. And finally, a very quick peek on AC Energy. This, as they say, that their $400 million green bond offer is actually 5 times oversubscribed. So they did mention that this is a fixed for life green bond offering, and that the final order book exceeded $2 billion. They priced this with a fixed coupon of 4% for life. You can see AC Energy continuing to rise there, up by 0.7% to 9 pesos and 93 centavos. The The REIT market is red hot, and the latest to join the play is Mega World with its M REIT. Now, here to discuss what investors can expect, we have with us Kevin Tan, Chief Strategy Officer of Mega World and President of M REIT Incorporated. Good morning, Sir Kevin, and welcome to Business World Live.
Good morning, Danny. Thanks for having me on your show.
All right, Kevin, exciting times for you guys. You've been talking to cornerstone investors. This is, of course, a very big offering here. You're hoping to raise from between 23 to 27.3 billion pesos with very big investors here from also abroad. Tell us, how has the investor take up been? You have not yet priced this, of course. This is still going to be happening on September 9. But how has the response been so far?
Yeah, the response has been great. Obviously, Mega World, this is Mega World's flagship platform. And it's an exciting REIT because it represents a sector in which Mega World has been the market leader in now for the last more than a decade, which is the office sector. And I think what's more exciting is that for this particular REIT, we're putting in 10 grade A office assets, all catering to just the BPO sector and the multinational companies. Of course, 8 of these assets are actually in Metro Manila, which continues to be the center of our economy, as you well know. And then 2 of the other assets are actually in Iloilo, which is right now a really bright spot for as far as BPOs are concerned. There's actually a shortage of spaces there. Yet we control about 70% of the office market in that particular city. Now, going back, half of the 10 assets are actually located in Fort Bonifacio. And let's face it, Fort Bonifacio is the primest address right now for BPOs and KPOs, or knowledge process outsourcing. So, and equally, what's exciting in investors is the fact that all 10 assets are actually located in our township developments. And that township development is really what Mega World is known for, right? It's a pioneering concept that we started. We're featuring 3 of our townships here. So that's Eastwood, McKinley Hill, and as well as in Iloilo Business Park. And as we know, these townships are quite mature. They have an abundance of housing options, abundance of amenity, a very robust and thriving ecosystem that revolves around the office buildings. So that's why it's very compelling for both office workers and the companies, and that's why all these factors enhance further the value of these assets, which makes this REIT quite special. So effectively, this REIT is actually a township REIT, no? And being Mega World is also the largest developer. We have 1.4 million square meters of office space currently operating right now. We're only putting in 16% of that into this REIT. So I think what excites the investors the most is the fact that we have a very long runway for growth.
Okay.
And we are committing to the investors that we will be able to double the current assets in 3 years' time. And we will be able to hit 1 million square meters by 2030, making us one of the largest REITs already in Southeast Asia. So effectively, of course, it's a very liquid REIT. We're floating 49%, which is quite high. That's also very appealing to the investors, which allows for greater market participation. So effectively, this is a way for investors to invest into our office business, but at the same time to also invest into our township business.
Okay, Kevin, let's nuance what you mentioned. This REIT is very much focused on the BPO sector plus NCR and the most expensive areas, not just in the capital but in the Philippines. Tell us, why is that? Why are you banking on that? Despite the fact, of course, we've seen limited mobility, people working from home, and tenancy rates going down. Why is this very much still your brighter outlook?
Well, when you look at the further, as far as the REIT is concerned, a location is always a very big consideration. If you're going to invest in an asset, if you're going to buy a home, buy an office, or buy any parts of it, as you do with the REIT, you always look at the location first, right? So, Metro Manila still continues to be the center of our economy. So as far as BPOs and KPOs are concerned, this Metro Manila will always be where their headquarters is, or where they'll have the highest concentration of their operations at. So that's the basic strategy. Now, another thing to note is that we are, generally being inside a township is quite compelling and quite attractive proposition. In fact, from from the beginning of the pandemic
Mhm.
until this year, we have been able to garner 415,000 square meters of transactions. No, these transactions for our offices. No, and we 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 uh, we, we actually attribute this to the fact that they're inside a township. Being inside a township is very compelling because, for BPO, it's easier to bring your employees to the office. Remember, a lot of these BPOs, their employees live in the township or around the township area. So when mobility is a concern, when there's a restriction in public transportation, that is not a problem for them. During the hardest of lockdowns, like an ECQ, for example, or when it's very, really difficult to move around, the BPO companies even have the option to take on more housing options from our dormitories, from the hotels, also all within the township. So these are things that can only be done inside a township concept, or in a township that's controlled and managed by one company.
Okay, so banking on that township strategy, you have had a strong statement on Pogos that you will not have them as tenants anymore, not just for MREIT, but Mega World as well is looking at this strategy. They have been, of course, instrumental in terms of the increase in pricing and land value of real estate. Tell us, how does this feed in to your strategy and why make this decision?
Yeah, the Pogo business, I think, does not really. Well, first off, it was very opportunistic at the time. They came in, they paid high rents, they paid advance rents. So, I think any and all developers, did entertain them. But today, our strategy is very clear. We want to support the growth of the BPO and the KPO sector, and we are now slowly limiting our exposure, or slowly diminishing our exposure to the pogo industry as far as the mega world business is concerned. Quite frankly, also, we found it very difficult to mix the pogo clients with our BPO clients in the same township.
Okay.
It's a very different. They have very different characteristics. I think if anything, Pogo would probably be more suitable, for example, in our gaming or casino areas, right? That would probably be more of a match, but not, I think, in our CBDs or in our mega world townships.
Okay. So in terms of outlook on the property sector, do you believe that the growth in the BPOs will make up for the exit, let's say, of the POGOs?
Absolutely, absolutely. We strongly believe in the BPO take up. No, in fact, MREIT, when we filed in the second quarter, we were only about 93, 94% leased out. Today, we have already contracts that brings us up to 99% occupancy. No, so that's just in a span of a few months, right? We do see a rebound in the BPO sector, especially, and this already started slowly this year. And we expect next year to be, really high rebound and growth years. No, although, if you look at BPO sector, it has never really shrunk. No, if you look at it last year, actually, it's one of the most resilient industries, one of the few industries that actually grew in terms of revenue, and actually even grew by headcount. So it was one of the few industries that continued to hire people. But I think going again from this year to next year is going to be a big rebound year, because of the fact that every time there is a recession or a recovery in the US or in Europe, you will always experience a lot of outsourcing of jobs here into the Philippines. And that's what's happening right now, exactly in the U.S. No, as travel and tourism has rebounded, we are seeing quite a lot of those kinds of jobs now being migrated back here to the Philippines again. So yeah, I'm very, very optimistic really of the prospects of the BPO and the KPO sector.
And sir, finally, before we let you go, just give us a bit of a understanding of your outlook on the retail sector that has been, of course, hard hit.
Retail sector, I think it's still going to be a slow burn. I think it's going to be. I'm more optimistic because vaccinations have already gone full steam ahead. We've already vaccinated at least 50% of Metro Manila, and we're well underway to population protection, and then eventually herd immunity. Everything really it all depends on this efforts, no. So I'm hopeful that the fourth quarter will actually will be better, and all the way to next year. Yeah.
Okay, so banking, of course, on that herd immunity that everybody has been waiting for. Thank you so much for those insights. Of course, the MREIT will be running and open to the public from September 14th to 20th. Thank you so much, Kevin Tan of MREIT.
Thank you, Annie.
And here are the other headlines we're keeping our eyes on. The country's active official development assistance portfolio jumped by 42% in 2020. This as the government tapped more quick disbursing loans to fund the pandemic response. Preliminary data from NEDA showed the foreign aid portfolio consisted of about $29 billion in loans from development partners and about $1.7 billion in grants. Japan remained the country's top source of ODAs in 2020 with a total portfolio of over $11 billion. It was followed by the ADB with $8.75 billion, the World Bank with $6.44 billion, and the Asian Infrastructure Investment Bank that extended a $750 million loan for the pandemic response. NEDA also reported that the government's utilization of ODAs also went up to almost 67%, while the number of programs and projects supported by the ODA went up by 1.4% last year. Now, the first batch of train cars for the MRT Line 7 project will arrive in the country next week. San Miguel announced that the 6 cars, or 2 train sets from South Korea's Hyundai Rotem, have cleared inspections and factory acceptance testing. More trains will be arriving in the following months until all 36 train sets acquired by SMC are delivered by next year, which is the target for the project completion. So far, the project remains at an over 54% completion rate. And that's a first look into the business day. Today's Thursday, September 2, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. Today, I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.